I think that quite often investors want to know what is the single best idea, and I think that's a fundamental problem with the way of looking at any sort of diversified portfolio. India and China have got many things which sort of are quite similar to each other, but they're also very different. Of course, they're both large populations. They've both got emerging middle classes. They're getting bigger, quicker. They've got fast-growing economies. But India, for a long time, has had a much healthier private sector corporate environment. There's a bigger private sector element to the stock market. China, of course, is much more state-owned. So China has done a better job of building infrastructure and building up that part of its economy. India, however, has for a long time been more attractive in stock market terms at certain levels.
But there are comparisons, and comparisons are made all the time, right? We have an article that we're carrying on the front screen of CNBC.com saying India is predicted to outshine China as Asia remains a bright spot for global growth, and that's largely being led by, obviously not just the growth dynamics, but also the investment interest that's going into India. This is, of course, a piece that's been put together by Nomura analysts. How do you kind of weigh in on that debate? Because right now it's almost like you're allocating money wherever things are looking relatively better.
Well, I think you need to distinguish between economic growth, where it's very likely that India will grow faster than China, and that's partly because it's a less wealthy country, and then stock market returns. And there you need to boil down to individual sectors. And so, for example, within India, we are overweight Indian financials and have been for a very long time because it's got these fantastic companies with long growth runways, strong management teams, etc. Conversely, in China, we're underweight financials because typically they're state-owned, they've got lower returns on investment, they've got slower growth paths. However, if you want to invest, for example, in internet stocks, then China is more attractive. So it's kind of different strokes for different folks.
Why is it more attractive? Do you think the regulatory overhang is done?
Oh, we think that the regulatory pendulum will carry on swinging, and we think that for the moment the regulator is more pro-growth, and they're going to be more supportive of the internet stocks. But of course, it's partly just a matter of availability. If you want to invest in the broader tech sector in India, then it's primarily IT services. Conversely, in China, you've got internet stocks, you've got a burgeoning hardware sector, and you've also got software. So it's kind of what's available as well.